Let's talk to Craig Erlam. He is a senior market analyst at OANDA. Very good morning to you, young Craig.
Morning.
Right, one thought-provoking slide for us to consider: the Great British Pound against the Japanese yen. One of your favourites, dare I say. What's the latest picture telling us?
Yeah, I'm a little hooked on the pound right now.
You are?
We've just been discussing off air. There's so much going on, and all the uncertainty, the Brexit uncertainty, the Bank of England going back and forth, the data, it makes it quite interesting. It makes it volatile. So from my perspective, that makes it interesting. We've talked a lot about cable recently. Euro sterling's less interesting. The pound and the euro are very much following each other right now. Sterling yen's another interesting one. So I really like this pair, and as you'll see from the past videos, and we've entered a really interesting level now. From a chart perspective, we've come back towards this 150 level, and 150 is really important for me. One, it's a nice big round number, so markets tend to track that.
Do you respect them? Yep.
The 50 fib from the high to the low.
Yep.
So it's an interesting fib level. We've just broken above the cloud from a price perspective, and the lagging line hasn't crossed above yet, so we're waiting for that confirmation indicator. Thankfully, that comes around 150. So if we break through 150, if we break through 150, sorry, you're taking out three levels, all of which are very notable.
As I always say, okay, what constitutes a break on, let's say, this currency pair? Is that a two-day close above? Is that a 3% move above?
There's the subjective matter, and that's what makes trading so personal and so difficult.
Scientific.
Yeah, exactly. And for new traders, that's one of the hardest things, I think, to come to terms with, is everyone has their own preferences on what they go for. And that will determine your trading style as well, whether you are a breakout trader, so you accept more losses because you're going to be proven wrong, whether you're a more conservative trader, so you want to wait for a daily close above the 50 fib and 150, for example. Like you say, you can have 2 days above, again, even more conservative, and that means that you may have less losing trades, but how many pips are you willing to sacrifice in order for that to happen? So it's very personal and subjective.
Would you say that if you're a very cautious person, you should wait for a weekly close above that key level?
The more cautious you are, the more you're waiting for, ultimately. So yeah, a weekly close could be that, but if that weekly close is 150.10, is that going to be enough for you? If you're waiting for a 2 days closing above 150, that could be seen as being cautious. 3% above, for example, or 1% above, or 0.5% above, because obviously we're talking about currencies here, so 3% is a big move. It's all very subjective, and it'll all be determined by your ability to withstand more losses or not, your aggression in your trading. There's a number of factors which will play into this. For me, I look at a daily close above, and I think that is being
enough of a confirmation
for me. Yes.
Okay.
But everyone is very different. The important thing for me here is 150. 150
right.
for me is such an interesting level right now. If we come back below the cloud here and we start to trend lower, we've had no confirmation from the lagging line, which is important in Ichimoku. And also we're back below the cloud, so that would make recent price action look like a false breakout. So, like I say, you're in a very nice, interesting trading zone right now.
So if I look at that chart, okay, you've had a failure at the cloud, okay, you've had a failure at the 50% retracement, you've had a failure at the round number. In terms of momentum, they're turning over, okay. Purely on the technicals, that would say that you should certainly not be long, and if anything, you should be short.
Well, again, it always depends on how aggressive you are if you want to be long. Some people would see the break above the cloud and say, I'm long, and I know that I'm going to be caught out on a number of occasions because I've got in there before we've had confirmation from like line, before we've had the break for key level, but taking price action in Ichimoku. And if we start to see the trade towards 155, 156, 157 previous highs, then these are the people who are going to make the most money on that trade. But obviously, naturally, there is always the benefits and the drawbacks of that. You're looking at this right now, and yeah, you could easily come up with an argument why you should now be shorting. If you are of a bearish nature on this particular pair, and fundamentals come into your view as well on this, you're saying we've fallen just shy of the 50 fib. When we've approached that level, the candlestick that we approached that level is a nice reversal candlestick. It's what's called a shooting star candle, nice long upper wick. So we've approached that level and we've been rejected quite clearly. So you could definitely give a reason to be shorting, but equally you could look at the momentum indicators and say these recent highs have been met with highs of momentum, and we've actually broken above that cloud even if we did come back into it, because when your price action comes back in from above, which we have, that's bullish in its nature without the confirmation. So technical analysis always has a case for perception, and that's where I like to look at the fundamentals of these things as well and decide, is this supporting my fundamental view or is it going against? Because obviously that conflict.
So what are your fundamental views on this currency pair at the moment?
So my fundamental views on this pair at the moment is that the pound right now is in a situation where a lot of people are bearish because Brexit isn't going well, because because the data is a mixed bag, because the data, because the view on a number of issues is on Bank of England is uncertain. There seems to be this internal battle. So I think people are very bearish on the pound right now. For me, that means that there's potentially an overswing on people being bearish right now, and the potential for upside news is greater than the potential for further downside news. Yes, we had the miss on inflation. Will that deter the Bank of England? I'm not sure, and the markets aren't sure. Markets are still pricing in a 72% chance of a rate hike in 2 weeks' time. Is Brexit going to get worse or better from here? I think there's more chance that it improves from here, that we get closer to a deal and further away, because no deal scenario suits neither side. And we're now on a timescale where we wanted a deal in 3 months. Chances are it may be the end of the year. But that means we're now entering the crucial phase where deal making and people coming to an agreement on certain situation and conceding on some points is going to happen if we're going to see a deal. And I still believe we will see one. So that's got to be bullish for the pound as well. So when you look at these factors, and the economy is gradually improving, the consumer squeeze has ended. We are seeing small amounts of consumer income growth. So these factors, for me, is a bullish case for the pound rather than a bearish case.
Okay. Right, final thoughts. If you were a trader going to work today, what would you be doing?
I would say right now I am bullish on the pound. Now, bullish with, again, the knowledge in the back of my mind that there is potential for some downside in the near term. This is a very volatile pair, which is why I like it. There is potential for downside in the near term. But so you've got to have that a bit of appetite for risk, which always comes with volatility. But I am personally bullish because I think the fundamental picture is bullish, and I think we've seen a lovely correction in the pound over the last few months, which I think markets may look at this as an opportunity. We'll wait and see.
On that note, Craig, thank you very much indeed.
Thank you.